Okay, let's just get right into it. If you've opened that car insurance renewal letter recently, you probably had to sit down for a minute. You are not alone. Prices are absolutely soaring across the UK, and we're going to crack the code on why that is, and more importantly, what on earth you can do about it. So, let's start with the big, scary number, 34%. That is the average jump in the cost of comprehensive car insurance in the UK in just the last year. This isn't some small tweak. It's one of the biggest price hikes we've seen in a long, long time. So what does 34% actually feel like in your bank account? Well, it means the average driver is forking out between 2 and 300 pounds more than they were just 12 months ago. That's a serious hit to the budget for pretty much anyone. And that really brings us to the two big questions we're going to tackle. First, what are the hidden forces that are pushing these costs through the roof? And second, what is the game plan for you to take back some control and actually bring that premium down? Okay, let's put on our detective hats for a minute, because to figure out how to lower the cost, we first have to find the culprits behind this price surge. And spoiler alert, it's not just one thing, it's more like a perfect storm of a few different factors. Right. Culprit number one is something that's hitting pretty much everything right now: inflation. The actual cost to fix a car after a bump has just skyrocketed. We're talking about the price of parts, the paint, even what the garage charges you per hour. And what's really telling is when you break it down like this. Look at that chart. It's not just one thing going up. You can see the huge jump for car parts, thanks to global supply chain chaos. And then you see a similar story for garage labor. Every single piece of a repair job costs the insurer more. And guess what? They pass that cost directly on to us in our premiums. Now, our second culprit, it's a bit ironic, really. The amazing technology that makes our cars so much safer is also making them incredibly, eye-wateringly expensive to fix. I'm talking about all those complex cameras and sensors that are pretty much standard now. And this is just the perfect example. It's all about something called ADAS. That's the brains behind things like your automatic emergency braking. But here's the catch. What used to be a simple, cheap fix, like a cracked windshield, is now a massive job. You have to recalibrate all the cameras and sensors mounted on it. And as you can see, that can easily turn into a bill for over £1,000. It's crazy. So when you pay your premium, where does that money actually go? A lot of us think it's just lining the insurer's pockets, but this chart tells a very different story. For every single pound you pay, a massive 65 pence goes straight out the door to cover the cost of claims and those super expensive repairs we just talked about. The insurer's actual profit? It's only about 5 pence in the pound. So the key thing to realize is that rising repair costs are what's really driving your premium up. Okay, enough doom and gloom about the problem. We've done the investigation, now it's time to go on the offensive. This next part is your practical money-saving playbook. It's all about giving you back some control. These are the 4 absolute cornerstones of getting a cheaper quote. We're going to dig into them, but it all starts with one simple idea: be proactive. Never, and I mean ever, just let your insurance auto-renew. Shopping around is the single most powerful thing you can do. Right. This one is probably the easiest win you can get. Paying monthly feels more manageable, I get it. But you're basically taking out a loan from the insurer, and they charge you interest for it. Just look at the difference here. Paying it all in one go, annually, can save you a chunk of cash right away. If you can afford to do it, it's an absolute no-brainer. Okay, now this is fascinating. Insurers use your job title to build a risk profile. But here's the thing. A lot of jobs can be described in a few different, perfectly accurate ways. Have a look at this table. Just by truthfully calling yourself a caterer instead of a chef could knock 75 quid off your policy. It's worth playing around with the job title options on a comparison site to see what works, as long as it's still an honest description of what you do, of course. Think of your voluntary excess as a lever you can pull. It's the amount you agree to pay yourself if you have to make a claim. It's a simple trade-off. If you tell the insurer, hey, I'm willing to take on a bit more of the risk by, say, increasing your excess from 250 to 500 pounds, they'll often reward you with a much lower premium. The only catch is you have to be sure you could actually afford to pay that amount if something happened. All right, so we've covered the fundamentals. Now, let's get into some of the more advanced strategies. These are the little insider tips and tricks that can give you that extra edge and shave even more money off your quote. Let's run through these quickly. First, adding an experienced driver with a spotless record as a named driver can sometimes lower the overall risk and the price. Second, a black box policy that tracks your driving isn't just for new drivers anymore. It can prove you're safe and earn you a discount. Third, and this is a big one, always check insurance quotes before you fall in love with a new car. You'd be amazed how much some models cost to cover. And finally, timing is everything. All the data shows that the sweet spot for getting the best quotes is around 21 to 28 days before your old policy runs out. And really, this quote from an industry insider just sums it all up perfectly. Insurers are banking on the fact that you're busy and you won't bother to shop around. They rely on our inertia. Being proactive is your number one weapon against these price hikes because, unfortunately, in the world of car insurance, loyalty almost never pays.
So, we've investigated the causes, we've gone through the playbook. What's the final verdict? Well, it's all about changing your mindset. You have to stop being a passive price taker and become an active, smart shopper.
And this is the most important thing to remember. Look, you can't control global inflation or the cost of microchips, but every single tip we've talked about today, tweaking your job title, adjusting your excess, timing your quote, those are all levers that you and only you are in control of. That is where your power is. So there you have it. We've laid out the reasons why things are so expensive, but we've also given you the playbook to fight back. You have the tools. The only question left is, are you ready to use them?